when US stocks, Japanese stocks, and the Japanese bonds are all getting dumped massively, when Bitcoin is also getting dumped massively, and when even gold is getting dumped. Even if you have absolutely zero interest in investing or making money, I strongly advise you to watch this video to the very end. There's a Chinese proverb, provision should go ahead of troops and horses. They're basically the same as an army marches on its stomach. The provision is the smart money in the market. And right now, that money is already telling you, our money is evaporating. What does that mean? Hello everyone, I am Money Zen. Usually, money just keeps transferring around. For example, if something bad happens to US stocks, money might pull out and move into US Treasuries. If Treasuries are in trouble, it might move into gold. Assets that money leaves will plunge. Assets that money flows into will surge. But right now, risk assets are down and safe haven assets are down too. No matter where you put your money, there is only one result. That is when you lose money. That money is certainly got pulled out. But instead of being transferred, it's literally evaporating. Why? Is it because the AI bubble is about to burst? So, the leader of AI, NVIDIA, they just released their financial statement and absolutely crushed all the AI doubters. The money he made this quarter is 22% more than the last quarter. With a financial statement like that, you still think AI is a bubble? But the same day, NVIDIA's stock price straight up collapsed. Recently, NVIDIA has dropped up to 20%. If you think that's just a special case, look at Meta, aka Facebook. It dropped up to 26% lately. Microsoft down 16%. PLTR down 28%. And Oracle, it even crashed 46%. You'll notice that these were the AI companies that gained the most this year. And in an instant, they all plunged by an average of over 20%. You put in $1 million and suddenly lose 200,000. And these crashing giants all have one thing in common. They are all tied to one company, OpenAI. So I think this is really strange. When I invest, I usually only look at big money flows and the stock supply and demand in the market. I rarely look at financial statements, but this time I couldn't help but peek at NVIDIA's reports. And you know what happened? I felt like I was transported back to the year 2000. I saw a company called Lucent. This company never appears in NVIDIA's financial statements, and many of you might not have heard of it. But in the year 2000, this company's status was exactly the same as NVIDIA's is today. If you want to mine gold in San Francisco, you have to buy a shovel. Right now, if the world wants to develop AI, they have to buy NVIDIA chips. So, NVIDIA is the one selling the shovels for the AI gold rush. But back in 2000, if the world wanted to develop the internet, they had to use Lucent's equipment. Lucent was the shovel seller for the internet gold rush. So why hasn't anyone heard of Lucent now? Because their stock price crashed from $84 down to less than 55 cents. People are forgetful. The undefeated legends of the past get washed away after decades. So what? Just because Lucent and NVIDIA have the same status, does that mean NVIDIA will follow the same path? That doesn't seem logical, right? But what if they aren't just in the same position, but doing the exact same thing? And just when I thought this was only a US stock problem, Bitcoin crashed 36% at maximum. Gold, despite a small bounce, dropped 11% at its worst. Then Hong Kong, China, Japanese stocks and bonds, all down. Here's the problem. If this was just an AI bubble, only US stocks should be falling. But right now, almost all assets are falling. What on earth is happening? If I told you the US dollar is going to become worthless paper, you probably think I'm just fear-mongering. But I'm not saying the dollar will just collapse. I'm saying the US capital is initiating a plan to make the whole world hand over their dollars and then turn those dollars into worthless paper. What does that mean? If you don't want to become a victim this time, or even wants to climb to a higher class, then you should subscribe to my channel, because I'm gonna be giving you more information like this. And if you're worried you'll forget everything after hearing it, and you don't want to waste your time, you can like this video and it will be automatically saved in your playlist, so you can come back and follow it anytime. First, NVIDIA's financial statement tell us they made 22% more money than before. Does that prove AI isn't a bubble? Many people will say, of course, because now, if the companies want to develop AI, they all need NVIDIA's chips. If those companies are not making money, they wouldn't buy chips, right? So if NVIDIA is earning more and more, does that indicate the whole AI industry must be profitable? Does it prove that the AI is not a bubble? And developing AI can make money indeed. Let's look at the facts. The chip seller, NVIDIA, sure did make money. They net earned over $20 billion in a quarter. But the number one player actually developing AI, OpenAI, they are on track to lose $9.3 billion this year. Next year, they might lose even more. And they aren't even going public. What does this represent? Guys, if you can't see the answer, switch your perspective. If you want to go to San Francisco for gold mining, you need a shovel. Can we really say that just because the shovel seller is rich, the gold miner is rich? The situation right now is the shovel seller is certainly making money, but the money they earned was more than all the gold miners combined. In other words, the reality now is you, the gold miner, can't make money at all, and even losing money, yet you are spending double to buy shovels for mining gold, just to let the shovel seller profit more. Doesn't that actually prove that the gold mine, is it a bubble itself? The gold miners can't make money, while the shovel seller is making more and more. Doesn't it indicate that the bubble is not only existing and getting bigger and bigger? Because if you're the shovel seller, you don't care at all if the miners actually find gold. You only care if your shovels can sell or not. As long as people come to buy, who cares if they mine gold or not, right? And to sell your shovels, you don't need the gold miners to actually mine gold. You just need them to believe they can mine gold, so your shovels can be sold. In other words, you just need to blow that bubble bigger and bigger to make more people believe they can find gold. So more people will buy your shovels more directly. The more money the shovel seller makes, it actually indicates that the bubble is getting massive because the miners aren't making money. Logically makes sense. So the same logic, NVIDIA is make money, only means their chips are selling well. Put it bluntly, so if you are an AI developer, once you buy NVIDIA's chips, whether you become wealthy or end up jumping off a building, what does that have to do with NVIDIA? And the reality is, the biggest developer that bought these chips, OpenAI, is losing money. Doesn't this actually prove that the more money NVIDIA makes, the bigger the bubble actually is? Sure, some people don't understand or don't accept this logic, but at least it proves that NVIDIA is profiting and the chip demand is huge. It has nothing to do with AI's worth or the bubble. It's like before 2008, the demand for mortgages was massive too. Did that prove there was no real estate bubble? But even so, at least NVIDIA is making more money. Their stock price and the whole AI sector shouldn't be plunging. But the reason is because NVIDIA's financial statement confirmed one more thing. And this thing looks exactly like the ghost of the Lucent before it collapsed. What does that mean? The game Lucent played back then was this. They lent money to their own customers to buy their own products. In simple terms, it's accounts receivable financing. Even though the gold miners are not making money, but why would they buy more shovels? Simply put, its customers have no money to buy my equipment. No worries. I'll lend you. This way, my sales numbers will rise in an instant. And the financial statement looks incredible. More simply, it's actually selling their own equipment to the client, but without collecting any money. They're waiting to get paid when the client gets rich in the future. That was the dot-com bubble. But now, the AI, OpenAI only has about $3 billion cash in hand. Yet, they signed a contract to invest $1 trillion. That's like having $30 in your pocket. But you dare to walk into a store to buy a $10,000 gaming console. Why? As I said in my previous videos, NVIDIA gives money to OpenAI on the condition that the money must be used to buy NVIDIA chips. Then, OpenAI turns around and signs a cloud service deal with Oracle. They take that promise of future rent from OpenAI and use it as collateral to get a loan to buy more NVIDIA chips. The money goes in a circle and ends up right back in NVIDIA's hands. Everyone's product gets sold, self-reinforcing capital recycling. The moment those contracts are signed, the stock prices surge. But after the release of NVIDIA's financial statement, it proves how savage this game has become. You'll notice NVIDIA sold $57 billion worth of chips in a quarter. But The $33 billion of that is accounts receivable, means that they sold 57 billion worth product, but over half of it was on credit. They even lend people money to buy their own products, and the clients are paying back slower and slower. Back in the day, Lucent was lending money to clients for buying their equipment too. It's like, I give you the equipment, you can pay on credit. When those clients finally get rich, they can pay the money to Lucent, but the time of those clients can repay is 64 days at the longest. Basically, Lucent has to wait nearly 2 months to collect some part of the money. Why do their clients have to wait such a long time to repay? The reason is all their clients have no money. The whole industry bought these equipment. Even after using this equipment, still can't make money. The cash flow of the whole industry had already been in serious trouble for a while. And NVIDIA today, these days to collect, went from 48 days in Q1 to 50 days in Q2. And now it's 53 days. It's getting longer and longer. The most important is, back then, after Lucent lent money to clients to buy their own products, they claimed their products were in huge demand. Orders were queuing in a long line. But at the same time, their warehouse inventory was piling up like a mountain. It's a massive contradiction. If your product is really in a high demand, then why is it stacking up in your warehouse? It means the market demand isn't actually that big. It's exactly because the demand collapsed. All that inventory turned into bad debt. Money couldn't be collected, and so many production lines had to close. This is exactly the crisis of overproduction. Now, look at NVIDIA's report. We can see that their inventory has already surged from $10 billion to $20 billion, literally doubled. So the same question, if AI chips are must-haves and being frenzy buying, then why is the inventory in your warehouse doubled? Doesn't this indicate that the downstream AI companies are already out of money? Microsoft CEO also said they have chips piling up in their warehouse. Why? It's because they don't have enough electrical distribution boxes. Translated into human language, the clients don't lack chips now. They lack electricity. So the GPUs are gathering dust in the warehouse more directly. The AI developers are pouring money down the drain to buy chips, but they can't get the electricity to follow along. So they can't make money. Meanwhile, these upstream chip sellers are waiting for these downstream AI developers to pay them. Isn't it a domino setup? As long as one card falls, all the credit that upstream lends out becomes bad debt. Exactly the same as Lucent back then. The money they lend to clients can't be repaid. Their cash flow snapped. No one bought their product anymore. Then the collapse happened. So whether AI is a bubble depends on whether companies like OpenAI can actually make money, not NVIDIA. And it's not just because NVIDIA, Oracle, or PLTR stocks fell. The bubble is going to burst. The stock price fall is just the result of the bubble bursting. The real bubble in 2008 was because people who bought house unable to pay their mortgages, which caused the whole thing to collapse and triggered a chain reaction. And now the AI bubble is the same. NVIDIA stock prices rise and fall. It's just a result of the bubble, not the reason. What we need to keep our eyes on is the OpenAI, a company that isn't public and no insiders data disclosure. When will they fail to hold up that first domino? And now there's another more important one, domino, that is wobbling hard. That is GPU computing power. Rental prices are crashing. As I mentioned in the previous video, but I didn't think it would happen this fast. Meta aren't paying for data centers with their own cash. They find the shadow banks to pay the money too. Instead, once the data center was built, they rented them at high prices. The shadow banks then packaged this rental income into a wealth management product and sell them to ordinary people, pension funds, and insurance funds. Meaning, AI companies use ordinary people's money to build expensive data centers for themselves to make more money. You see the details later. The key for this mode to survive is the rent of the computing power has to maintain a high position, high enough to cover all the costs, and profitable simultaneously. Because rent is the income that maintains the whole game. But now we see, back in August, the rental price for an H100 chip was $3.3 per hour. Now, it has plunged to about $2. That is a 40% drop in 3 months. So, countless data centers that bought sky-high price of H100 chips, built factories and hooked up power, ready to starting the rental business. But once open, they found out the rent of computing power plunged. The break-even expectation was 3 years originally. Now might not break even in 5 years. Once this domino falls, do you still think it's none of your business? You might think you didn't buy any AI wealth management products, right? But you have pension funds and insurance, right? You don't get to decide where that money gets invested. The fund managers decide for you. Does it affect you now? You might say, you don't care about the money. What about your boss? What about your company? In the 2000 dot-com crash and the 2008 financial crisis, stock market crashed, housing prices crashed, businesses crashed. Do you have stocks? Do you own a house? Even if you don't, what about your boss? When your company's cash flow snaps, the one who got laid off might be you or not, or even the company just go under. Will you lose your job? People are forgetful. It wasn't that bad in the past, 2000, then 2008. That was only an 8-year gap. Now it's been 17 years. The closest case was the 2020 pandemic. Many people didn't do anything wrong. They didn't even invest at all. But when the economy collapses, is it really unrelated to you? Is it really that far from you? So what does it mean if the AI bubble keeps getting more intense? For example, everyone is dumping their money into speculating on US stocks. Or these AI giants are constantly issuing debt to the market, borrowing money non-stop. Does this mean that all the money in the market is being sucked away by these AI companies? OpenAI's CFO even suggests the US government to guarantee loans for OpenAI. Let government, banks, and private equity funds to backstop their chips and data centers. In other words, if the US doesn't want this AI bubble to burst, they have to constantly find ways to give it blood transfusions, send money to it. They have to allow it to drain liquidity from the market. But here comes the problem. Not only the market is out of money, but also no one is buying US Treasuries. What does that mean? The US government spends an average of $600 billion per month, and they shut down just a couple months ago. So that $60 billion couldn't be spent. That was like the US government freezing $600 billion. But now that the government has reopened, that money is unfrozen. So shouldn't the market be less short on money? Then you see the Fed's overnight reverse repo continues to crash to nearly zero. As I said earlier, this money is a spare cash that banks and Wall Street deposit at the Fed. It's like a piggy bank for emergencies. The more money in there, it's basically like everybody doesn't need that money for emergencies. But now the money is gone. It means banks and the Wall Street have already taken their emergency funds out. And what about the other piggy bank? Bank reserves. That is also falling. It's down to 2.8 trillion. If it drops another 100 billion, it breaks the red line. All the US banks won't be able to lend money anymore. If something happens, these two piggy banks can't provide a blood transfusion to the financial system. Simply put, to keep the AI bubble from burst, they have to take money out of the market. But right now, even the emergency money has been drained dry. What else? As I mentioned in the last video, even after the Fed cut rates, the interest on US Treasuries didn't go down. Why? Because the price of Treasuries plunged. It's already hard to sell. If they lower rates further, even fewer people will buy them. More simply, there are 3 groups of people in this market who need cash. First group is the people keeping AI bubble alive. Second group is the US banks and Wall Street, which is the financial system. The third group is the US government. And right now, the ones being sacrificed are the financial system and the government. They are using the bank's money and the US Treasury's money to feed the AI bubble. So what is the solution? The solution is to let other assets crash hard and force that money to transfer into the hands of the banks, the government, and the AI giants. Take gold as example. Although it didn't crash, but what's the reason for its fall? Because the US accelerated the Russia-Ukraine situation, and Russia announced they are selling gold. Ever since Japan promised to invest over $500 billion in the US, Japanese stocks, bonds, and the Japanese yen all plunged. And the Bitcoin, the US said they are going to tax crypto holders. They are basically telling you, if you sell now, you don't have to pay the tax later. So, do you sell or not? Even BlackRock, who always only buys, not sell, has started dumping the market, including ourselves. We took some profits on gold, Japanese yen, and Bitcoin earlier. We are holding US dollars. So you notice, after this series of dumps, the US dollar index started to bounce back. So, does that mean now that most assets have been smashed down, the money is flowing back into the US? That's not enough. That amount of money isn't enough to take the load of the falling US debt. Here is a thing many people don't know. A while ago, the US government confiscated the Bitcoin from Chen Zhi and Quan Ziming. That's nearly 200,000 Bitcoins. Add that to what they confiscated before. Actually, the US government is holding 400,000 Bitcoins, plus the biggest consortium, BlackRock's 600,000 Bitcoins, not even counting other tycoons, capitalists. The US controls at least 1 million Bitcoins worldwide. They are already the biggest dealer in Bitcoin, and the US issued Bitcoin ETF. This means the whole world can buy Bitcoin, just like buying US stocks through the US. What does this indicate? It indicates that if the world wants to buy Bitcoin later, they have to go to the US. And to buy Bitcoin from the US, you have to use the stablecoin that the US fresh issued. Does that mean Bitcoin is getting pegged to the stablecoin? Why didn't the world use gold in the past, but use US dollars? It's exactly because the US held the most gold in the world. So everyone knew that US dollars could be exchanged for gold. And now, the US still holds the most gold among the world, and the Bitcoin too. So, if the US pegs their stablecoin to gold and Bitcoin, will everyone trust the stablecoin? The essence of currency is trust. As long as people trust the value of the stablecoin, they will be willing to swap their real money and assets for it. In other words, the stablecoin is a brand new money printing machine. What does it mean? As long as banks and institutions hold US Treasuries, they can issue stablecoins. The more treasuries you buy, the more stablecoins you can print. And as long as I issue a ethereal stablecoin, I can swap it for the cash in your hand. Then, I can use your hard-earned cash to buy more US Treasuries, then issue more stablecoins. And the US Treasuries has interest. So, the more stablecoins I issue, the more treasuries I can buy, and the more interest I collect. Put it more simply, today, you give me cash, I give you stablecoin. Then, I take your cash, buy US Treasuries, and collect the interest. You pay the principal, but I collect the interest. Wouldn't every bank and financial institution rush to buy treasuries just so they can issue stablecoins? I believe they will take this step very soon. They will turn stablecoins into a mobile payment tool. You go to Ralph Lauren to buy clothes or Starbucks to buy coffee. You won't need US dollars anymore. You just use your phone, scan a QR code, and pay with stablecoins. This will collect all the US dollars held worldwide and swap with stablecoins. This is an ancient Chinese proverb. Sacrifice the plum for the peach. The Fed won't need to print money to save the US Treasuries anymore. The whole world will trade their dollars for stablecoins, and the banks will take all that global money and use it to buy the US Treasuries. They will take over the US Treasuries. So you'll notice, as soon as the US government reopened, they passed an act which is allowing banks to hold more US Treasuries. They have already untied the bank's hands for the massive buying later. Of course, at the beginning, people might not want to swap their dollars for stable coins. Just like when credit cards first came out, nobody used them. But who doesn't use them now? Bitcoin was called a scam from the beginning, even till now. But it goes up to over $100,000 now. So, as long as the banks recognize the stablecoin, Amazon or Walmart launches a campaign. As long as you pay with stablecoin, you can get a 10% off. Will you obediently hand over your dollars and swap them for stablecoins? By that time, US dollars will be used to buy US Treasuries. Stablecoins will be used for daily transactions. One set of money becomes two. Naturally, this solves America's problem of lacking money. But before that, everyone must be mentally prepared, because in history, every single monetary revolution is accompanied by a massive plunge in asset prices. Warren Buffett is waiting. The Big Short is waiting. And for us, we are waiting too. If the train of crash is about to hit us, we will definitely exit the market first. Protect our principal at all costs. If you have a better understanding or better logic, welcome brothers and sisters who have a different opinion. Feel free to leave a comment down below to discuss with us. Due to time constraints, I have to end here. But what do you anticipate in the next episode? A lot of people are waiting for this line every week. It's gonna be a crucial one. Alright, I'll continue sharing tips on how to become wealthy, how to be an entrepreneur, an investor, and achieving financial freedom every Sunday at 8:30. If you don't want to miss out, make sure to subscribe to my channel and click the little bell and generously share this video. I sincerely wish all of you who like this video will reach financial freedom soon, as long as you can find 1 or 2 useful sentences in today's content that can help you live a better life. I'll be completely satisfied. Alright, I'll see you next week. Bye.